Hello, good evening, guys. Welcome to another episode of Freewheeling Fridays. So many things to unpack this week. Hey, Vinod.
Hey, good evening, guys. I tried to cut my hair, but yeah, I think it doesn't still work. Yeah,
Hey, you're going to have to invite some urban clap members into your home. Without that, it's very difficult.
yeah,
You realize how important it is that we have salons and barbers and other
they
ones,
were
right?
moat. Yeah, they were moat as long as we have to grow our hairs or hair grows.
Well, I don't think I'll have that much of a problem anymore soon. At least I'll be safe.
Yeah, you'll save money and you'll also save save yourself from needing to go to that place every time.
Exposing yourself.
Yeah,
Yeah.
yeah, yeah.
Look, I think what do we don't have anything planned for today, but I think one thing that is on top of everybody is a well-known. Um, yeah. I think there was some stuff happening in the startup ecosystem in terms of acquisitions or at least investments by big corporate houses. I think that needs a mention. And then
Hmm.
we're going to be starting our angel course tomorrow. I think we will have an announcement on that. I know we might getting to you guys with a lot of information about our angel course, how many slots are left, yada yada yada. So why don't we start with that, right? What do we have from the angel course side? Do we
The
still have any slots, or the slots are gone?
So I think if people want to join, they can just join in the last couple of minutes today. But I think look, we are more than filled. I think this batch is probably the maybe we have the highest number of participants, if I am right, Karthik. So this is like
Yeah, yeah.
a very very fulfilling batch. That's what I put up on my Twitter also, right? Saying, look. We're full. Thanks for all the folks who share it on Twitter and who joined us. Including a lot of people who invest with us already. I think this is going to be an exciting batch. So I am excited for tomorrow. Tomorrow is when we start the course, and at the same time, right? I think we should also tell everyone that look, our next batch dates will be announced by end of today, or by tomorrow morning. The dates should be updated for our new batch. The next batch that's going to come up shortly. And if you are still interested, if it's too late for you, and you could always join the next batch, which is likely to start. My guess, I'm just making some numbers, roughly, August, late August, roughly, is what I'm guessing. And feel free to join. Take full advantage of our course. Yes.
Yeah, and look, even if you would like to and show your interest, right, you can always go to our website and enter your details. That way, we will have your information with us, and whenever we announce the dates, we will get back to you on that. So I think we will have that form up on our website as well pretty soon. So do feel free to check out that space.
Yeah. Yeah. Absolutely.
All right, so we are still waiting for Bhargavi to join. I think
Okay. So looks like
we have an interesting story.
interesting story to tell on Freewheeling Friday, hopefully. so,
Yeah.
so Karthik, so
So,
let's move on. Since by the time she comes in,
yeah.
yeah,
So,
the corporate story is interesting. Maybe we should tackle that first. Yeah.
should we? Okay, okay. What do you think about the new? Is it? It's not necessarily new, but it's definitely up and coming, right?
Yeah. Yeah.
The interest shown by corporate biggies in the startup world.
Yeah. Yeah. So it's interesting, right? Like it's taken so many years, firstly, for it to kind of happen. And now you have the Tatas, you have the Reliance Group. Uh, I'm right, Karthik?
Yeah, yeah, yep, yep.
Okay.
That's the topic. Yes.
Yeah,
Shoot.
oh gosh, revealing is
Go
like
for it.
so. We are trying to reach each other's mind that are we talking
Minds.
the same topic? Seriously, yeah. I think Tata acquiring, in my view, right, it's an acquisition of Kyofit. I
Yeah.
don't
Yeah.
see that as like some kind of a strategic investment and anything like that, right? I think obviously we all don't know what is the end full details,
Mm.
but making if guesses are right, that's an we should probably put it up, Karthik. So I think PureFit acquisition is like likely, right? It's like maybe a deferred plan, but I think it's almost a full acquisition by Tata, is my view. I don't think so. This is an investment that's going in, or they've already taken majority stake by agreeing on certain terms and conditions, right? And clearly,
Yeah.
right, Mukesh joining Tata as a president of Tata Digital, right, is amply clear.
Right. Right.
Yeah.
Right.
And that's really good. That's a good story to come out. Yeah.
I
And
think, look, this is also interesting for somebody who is looking at healthcare space, right? Uh, by a stretch of imagination, right? I think CureFit has been like the biggest story in the healthcare ecosystem for quite some time. Since the Portias and the Practice of the world.
yeah,
Which makes it all the more interesting, right? This acquisition. I'm just trying to put up that
yeah, yeah,
article from ED. Yeah,
yeah.
yeah.
And it's not just one, Nagathi. I'll send you another one also, right? As we speak. Um, there's this.
1MG is another
Yeah,
acquisition by
yeah,
Tata, also in the healthcare space. And then I think they acquired a company called Fraternity before.
yeah. So somebody who, I think the strange thing, Karthik, many not may recall, CureFit itself is like a pearl of string strategy, I used to call.
Correct, correct, correct.
And
Yeah,
somebody is acquiring CureFit for their own pearl of string of pearl strategy, in a way. So Tata acquiring 1MG, Big Basket, and Profit is like a larger part of the strategy. And I read somewhere somebody tweeting, right? Tata is still doing its core business because India's core business now is digital,
mm.
which is
Interesting.
interesting.
Yeah,
It is very interesting. I don't know. I couldn't find where the tweet is, but I like that. In a sense, India's core business is digital, and Tata is doing its core business in a way now.
yeah.
So I think that's really good, right? Like when larger players get it right, it also means there's enough opportunities for acquisitions for startups, more liquidity into the system, and look what happens to a lot of these founders and employees, right? Early employees who would probably sell their ESOPs. I mean, one MG, I think is like a much stronger acquisition in a way, right? You see, right?
Mm, mm, mm.
And that's great for the ecosystem, yeah. And they'll come back and start something else, so there is a lot more enterprise and energy left in some of these founders. They'll come back and start something.
And there's a little bit of mirroring of strategies happening here, right? And on the other end, you have Reliance acquiring NetMeds, getting very active in acquiring digital first products like Urban Ladder, and so on and so forth, right? This is good. I think finally large Indian corporates are taking startups seriously, and in fact, I think this is them gearing up to fight with the Walmarts of the world and the Amazons of the world.
Yeah.
Given Amazon is also coming into medicine delivery as well, right? So interesting times.
And that strange news that we discussed last week about Walmart, SoftBank wanting to invest in Flipkart,
Flipkart again, yeah.
and that's also massive news, and that kind of seems to like tie in, right?
Hmm, hmm.
So the story is only going to get stronger. Maybe you'll have Reliance, Tatas, and Amazon, and the Walmart, going for the large digital businesses. In some sense, that's what it looks like currently. Four-legged, four competitive people at this stage.
Yeah, yeah.
Yeah, that's
Great. So that's one interesting development in the last week. Anything else that that caught your eye?
yeah. I think a lot of them catches the eye. I put one on the Slack channel. Let me check that. So the The other news that keeps happening, right, Karthik? Last week we did touch upon briefly, right, saying startups. TechCrunch article largely, right? If you remember, we were discussing last week, right?
Yeah,
Uh,
the deal flow article.
yeah, the deal flow article. So,
Mm.
over the week, right? I think there is some amount of thinking on why that's happening, also, right? And what's happening. I had a couple of calls also, right? VCs are also thinking how to get early. The reason of that article itself is, I think, two reasons. If you ask me, one, there is a mushrooming, if you call mushrooming of micro VCs and angel syndicates. That means
Mm.
micro VCs and angel syndicates are closer to the entrepreneur, and they're just funding them already before the big VCs can lay their hands on after a point in time. So that's happening. Because of that, right? I think the larger VCs are maybe feeling left out, or they're thinking it gets expensive for them to invest at a later stage. So this is creating they wanting to come in early.
Mm.
So what's happening in that direction is they are either overpaying because they have to get in early without enough validation and data. They are overpricing some deals and taking it away. So either ways, right? There is a mismatch in pricing, right? Because of people are fighting for access, not for the price, in some sense. Uh,
Correct.
so that I think will eventually boil down startups either getting money too early and not building strong enough business and struggling, which may end up leaving a lot of companies in a bad state. Or if there is a mushrooming of so much capital that's happening at the pre-seed, syndicate, and micro VC stage, right? Which will also kind of happen that how many people can actually support the company for the longest term, even if they are like still doing okay, right? I think these two parameters will kind of weed out a lot of both investors on the lower side and also companies on the upper side, because they're getting overpriced in the beginning itself. Overpriced or being overpaid rather, not overpriced. But so both of this is going to result in a situation where before it comes back to normal, where larger VCs stick to their stage and smaller VCs play their stage in a way. I hope it happens. If it doesn't happen, we're going to have this flux situation, which will cause this article to come out again. It's not even an article.
So,
Yeah.
my sense is that I think it will happen. It has to happen, right? Because no there is no other way to do this, right? Because large funds, they have an obligation of solving for a certain ownership in companies, and there are only so many companies that they can fund and sit on their boards and work with them. So there are constraints for large funds, right? And on the other hand, uh, whereas if you consider micro VCs or syndicates, right? They don't have those constraints. I can take a 1% stake in a company and still invest in that company. I don't think a Sequoia or a Kalari would potentially do that. So which makes it easier for entrepreneurs or micro VCs to do business in a sense, right? Because there's less of a barrier there.
Yeah, I think
Um,
yeah. Karthik, that itself is a separate philosophy, right? Between do we need ownership or not ownership, right? I think there are certain assumptions in that. Maybe we'll discuss that later. But yeah, you're right on that. Yes.
Yeah, and the other thing that I was thinking, is there's also a little bit of I know we've seen some funds, right, saying, hey, look, we want to lead the round, so we're gonna set the terms. We'll tell you who are the other investors that you want to bring in or not. So there's also that dynamic that goes in, which is not always easy for founders to navigate, right? I don't think these constraints are not necessarily there with micro VCs or syndicates, because a lot of us do a lot of co-investments with other funds, and I think it's pretty democratic that way, if you will.
No, Karthik, actually, I was going to say, right, you should just put up, right, we've told this multiple times. In 12 companies, right, in all 12 companies, we have somebody else investing either with us or we investing with them. So
Correct.
there's an absolute sense of, doing this together in a way, right? We are like saying, let's do this together. And if the company grows, we all share a certain amount of thing. I think this ownership, right? I don't know where it comes from. It's a fund math, in the old
It's a
era,
fun one. Yeah,
fund
yeah.
math, right? In some sense. But I think, we should look at it much more closely in the new era. does fund math really need, to work in that way, or is there actually, this Duncan Hippo is had an extensive discussion on it, and recently Sajid also brought it up, right? So my response to that, right, was very clearly, right, look, at our stage, right, I don't think so. I'm very bothered about ownership, like you said, right. I just want to make sure I get into really like good, interesting companies, and I think our multiples will speak for itself because the stage at which we are getting it.
Correct. Very
And
much so.
yeah, so that math really works out, and philosophy on if recycling is also got right. There's another thread yesterday, I think, by Leo of Susa Ventures. It talks about how to efficiently recycle capital to some extent, right? If these two things are done right properly, I think in this ownership question should not arise except under certain assumptions or conditions, frankly speaking. So this ownership myth may be broken simply because of another reason also. We are not talking anymore about companies like a $1 billion company. We are talking of a $10 billion company. And US is seen like $100 billion valued companies, right? Flipkart is somebody's talking about $40 billion company, right? So when value is so high, right, of these companies, then it doesn't matter, right, what the ownership has to be in a way, right? So I mean, yeah, 2% of a 40 billion is like massive still. So I think that's where the math kind of starts breaking off. I think this requires a lot more work. I think interesting to study this actually clearly. Why do you need ownership, or do you want to get into the right companies? Yeah.
Yeah.
So Bhargavi is joined. Welcome,
Welcome,
Bhargavi.
Bhargavi.
Bhargavi looks familiar to me for some reason, to someone whom I knew or know. Yeah.
That was a dig. When was that? I think Vinod hasn't seen Bhargavi in like months now. Is it months?
Yeah, I just showed my face in probably the call last week. But I got a new light, so you will see me more often now.
You look
Oh,
bright. Yeah, you look very bright.
And it works even with minimal makeup, so I really like it.
okay, interesting. Okay.
Is it the same light that I referred?
Yeah,
Cool,
yeah.
cool, nice, awesome, awesome. So we were just discussing, CureFit's potential acquisition. I'm not still calling it acquisition. In all likelihood, it's an
Oh, you
acquisition,
broke the
or at
news.
least, yeah, at least a majority acquisition in CureFit by Tata. So we just discussed that, and then we were discussing some philosophical, contours of VC investing, right? What is whether ownership really matters, or big VCs coming into seed stage and stepping on the toes of micro VCs or syndicates.
Oh,
Is
Karthik.
this going to last?
No, I think we shouldn't say we're stepping on toes because they'll assume you are also stepping on.
On the Yeah, for sure. Yeah, I think a lot. You're right. When there were no syndicates, when there were no angel funds, right? It was all their forte, right? Essentially, the early stage
There was
VCs
no
were very much.
funding. There was very limited funding. What do you mean? It was not their forte. It
It
was
is a supply
held
thing. Yeah.
by Mumbai Angels and IAN and Chennai Angels and the like. So don't worry.
Yeah. So,
Yeah,
so,
yeah.
so Bhargavi is like just shooting really, right? She's like fired up to shoot today. Yeah.
Right, right. She's hitting the ground running.
Yeah. And Karthik, she's right. Look, there was less competition. There was supply. There was more startups who wanted money, in a way, and the capital was limited, right? So there are only
Mhm.
few people who could give you money. Today, capital is available massively, and people are chasing. What it changes also, right? The agility of a micro VC firm or a syndicate lead against a high capital and possibly a non-agility of a large venture capital firm. I think that is to be figured out because see, we worked in venture capital firms, right? So we kind of know what's the process cycle, how much of time it takes, to go through a cycle to invest, right? You,
Right.
me, and Bhargavi, right? We can invest in a company in like 2 days or decide to invest in a company in less than 2 days, right? Over a call. I think that's like agility that micro VC firms and syndicates have, which will be difficult for large firms to actually manage, because of whatever they've set up, large processes. And I think that is the fundamental reason, if you ask me, where it's going to be.
Yeah, and also, I have a flexibility and the discretion to invest in a company without doing even a due diligence, right? But, a proper, legal diligence or a regulatory diligence, if it
Full
comes to
diligence. Yeah.
Yeah.
full diligence, yeah. So we'll
And
obviously do
not only
business
that,
diligence
right?
all the time.
Yeah, and I think not only that, it's very true. So there are some VCs for certain category of certain sectors, right? For example, D2C, where we work with, and sometimes when I know the VC is going to take a lot of time, then you don't want to refer to that VC because probably you're putting yourself as well at stake,
In the
because it just
process,
takes so
yeah.
long, the process. And the other thing which I have seen, where angels or angel syndicates come in, is we are real angels, right? We are okay to work with company, mold founders, make them VC ready. So we know VCs expect certain preset conditions, and so it's a very big value add, right? Because we are real angels getting in there, making them ready for a larger institution to come in and play, because sometimes when we have to roll up our sleeves, we are hands on. And in a fund, probably it's going to be done by people who are 10-12 years lesser experienced than what we are. So I think that's a very big value add which many of these syndicates bring in.
Yeah, I think the philosophy of seeing somebody as an optionality versus seeing somebody with conviction, right? It's like we really believe in you as the founders, or we
Yeah,
really
yeah,
believe in you
yeah.
and the idea. Yeah,
Yeah.
great.
So Karthik, that brings like another topic that I want to talk about, right? Maybe if, I don't know, I couldn't pull the tweet out. Maybe So there was this interesting banter on value add, and there's this joke, right? VC joke. How can I be helpful joke that keeps like an everlasting
I
or
know what you're referring to.
yeah,
I think I will try to pull it up.
yeah.
Yeah, go
So
ahead.
there's this evergreen joke on let me be helpful, right? Like today, right, I was actually typing it to one of our founders, right, after he had done something very interesting. And I said, I want to thank him. And I said, feel free to, ask me, if anything of help, So I was just thinking, this evergreen thing is created a notion, even in VC's mindsets, right? I should not say that, right? That's like weird. But I said, I went ahead and typed it, let me know how can I be helpful at the end of the day. So it's created like a false notion not to even use that literally, it's kind of biased people not to say, can I be helpful? So that comes down to that point, right? Are VCs really adding value, or marketing value add as a marketing gimmick, right? So I will tell, right, marketing is perception. I can keep hounding everybody saying founder friendly, founder friendly, founder friendly, put it all over my marketing material. Then are you really marketing founder friendly? We don't know, right? So and I think how difference is the perception created by marketing versus reality, right? Is hard. And this is a conversation that was happening between Shailendra and when I asked him, how do you find out if really which species are adding value? I think his reply was very simple. I thought, it's going to be. He said, look, maybe do a couple of reference calls to say really have they added value to their other founders in whatever form, right? That's it. If somebody is claiming to be value add, you just call one of the portfolio founders in that company and ask, have they ever added value beyond the,
Exactly.
and seems like a simple thing to kind of do. And I think that was very very interesting to me, if you ask me, right? Yeah, value add.
But we're not so here again, right? If we put ourselves in a founder's shoe, because now is a scenario where
Hmm,
at pre-seed stage, capital
hmm,
is actually chasing companies. They
hmm.
have options, but as it grows, right? I think the options reduces probably for a founder in terms of where they are going to get the money from. And maybe even if the diligence is how much would they matter at that point in time, right? I think it comes down to what does my SHA say, and what are the rights I'm getting, and how much money am I getting from home? Don't you think so? Beyond, let's say, Series A, Series B onwards.
Yeah.
Uh,
Yeah, I think Bhargavi, there'll be different types of values also. I sense, right? Like that you can add, or like at the current stage that we invest in, right? For example, what's more relevant is, can you help them in recruiting? Can you help them find clients? Can you help them find the next set of investors? For example, I'm saying in our stage, think of a company which is at Series B. At Series B, what do I need is, I need senior management. I need culture, maybe help with culture, how to figure out, or even earlier than that. Then I also potentially need, how do I carve myself on a path to IPO? Maybe I need a strong CFO who can take it to IPO. I think each stage will require a different set of value adds. It may not be
yeah.
exactly the same. Uh, and if the investor is in that stage, right, I think they should think, what exactly can be the value at that particular stage, in a way. Yeah. So I think the hands-on thing is required. When you are in the stage that we are investing in, extremely hands-on approach. Post that, I think it's more like a consultative approach. If you ask me, after a B or A or B, right? It's a lot more consultative. In the earlier stage, a hands-on approach to help, to make all these connections, right? That's correct. I think that's true in that sense. Yes. So Karthik, if three things you have to pick, or to value add, what would you say? Like, or maybe even one, what would you add value on?
Look, I think one of the biggest value adds, right, that we can see, even though we're investing in these companies and we know them fairly closely, right, we're still outsiders and we can bring that outsider perspective on these companies. And when founders, their brains are constantly churning with new ideas, something new is coming up every day. They see something shiny and they get very excited. So the biggest value that we can do is actually help them uh, rationally analyze that, be a sounding board for them, and not necessarily tell them to do one thing or the other, but at least to unravel it, right? Like go cut through all the layers and then evaluate that idea or a new thing that they want to do for what it is. I think that I would say is the biggest value add that we can do, which is not easy, right? Unless you know the space or unless you have seen some companies doing similar mistakes, you wouldn't necessarily have that insight into it. That's the unique perspective that we can bring, right? Because we've seen, enough number of companies at this stage with our experience, and I think that is something that we can bring to these companies as biggest value, in my opinion.
Yeah, yeah. Wait, anything else that's caught your eyes?
Look, I think I wanted to discuss something that has been bugging me for quite some time, right? Uh, the valuations. Founders expecting really high valuations, right? I think we recently met a company. I mean, there's no point in naming names, and there's nothing wrong in asking for a particular valuation, right? We actually like the founders. We also thought the business was okay, but when it comes to valuation, the expectation is like really, uh, out of this world. Do you think where is how I just I so I think one founder we asked, how do you justify this valuation? Uh, One answer that we got is like everybody else is getting this valuation, so why not me? So that's one justification that we saw. So it's kind of interesting state we are in, right?
So
I think
Karthik,
my friend has got it.
My friend has got it. Yeah, exactly.
Karthik, I think yeah, those are two examples that you remember, right? I think to me, right, where that's coming from is because, like we were discussing earlier, right, there is enough capital. There is a glut of capital that's available, right? So when the demand for quality startups is so high, right? Then you can command a higher price, right? It is somewhat at this stage a demand supply question.
Demand
Quality
supply.
founders, yeah, and so you can try and ask whatever valuation you think makes sense to you, and because people are getting funded, it's also looking like, I'll give you an example, right, on the flip side of the story, right? Like not the founder side, the VC side. I was looking at a deal, or like you guys are aware of this. We're looking at this deal, and one of the large firms, right, offered a term sheet overnight, $1 million round. Okay. Then the next day, another large firm offered another term sheet. It immediately became a $4 million. Do you think the valuation will be the same for the same company in less than 3 days or 4 days? When 1 million, let's say, is at some 4 million, if you invest 4 million, you will already be at like some $16 million. It is the same company, right? Like so if VCs are willing to, right, put money on quality founders and immediately shoot up the numbers, right, then why will the founders not demand? So if I know this example, right, for example, this founder or somebody's spoken to this founder and this news is in the open, boss, he's going to go and come and ask us exactly the same number, right? He said, I want like $16 value. So it's a two-way driving thing, two cogs or two wheels. One is the VCs driving up, and also, right, the founders, pushing it. Both. It's like a perpetual cycle, maybe, till somebody realizes there is no money, or the startups are failing or whatever happens, right? Which can happen, or the market tanks in a big way due to some unexpected event, because the market's always looking very frothy whenever you look. So I mean, I'm like saying, there has to be like another unpredictable black swan or something, then everybody, just goes down.
But we
Unless,
don't want that. But I
yeah,
was noticing this not only with us, right? So I noticed this. I was watching latest episode of Shark Tank, and actually I noticed it even there, because the valuations which was in the current season was way higher than even if you look at 2 years back, or the last season. So I think I felt phenomenal.
Mr. Wonderful is not there to squeeze them.
No, he is standing here. You guys continue.
yeah, I think it's only,
Okay.
like, I think the average check size, right, anyway keeps going up, right? I think, if you look back 5 years ago, right, maybe the average seed check would have been $5. Today, the average seed check is like $2 million, even in India, right? So in US, right, average seed check is $2 million. So I think inflation plus, the ecosystem keeps pushing the prices high, inflationary also. And I think, that's going to happen here also, right? Like, so we are calling ourselves pre-seed, it would have been seed maybe many years ago. So it's like only getting harder and harder
But
for both VCs.
so, Bhargavi, let me put this question to you. It's actually a related question, right? What really caught my eye last week is not necessarily anything to do with startups per se, but the recovery in the US market, right? The US economy seems to be recovering much faster and strongly, rebounding very strongly after the COVID pandemic, and their inflation is already at 5%. So there's been speculation that the Federal Reserve is going to jump in,
Yeah.
increase the rates. Is this going to impact us at some point and eventually have an effect on the valuations on startups?
Yeah, that's the first thing. When I read this news, right? That's the first thing. What's going to happen to all the capital that's coming in?
Yeah,
Because it's always been an attractive market here, right? For people. So if US is going to become attractive, then what's going to happen? But I think in terms of startup investments, it's anyway still a alternate asset class. It's a different ball game. The multiples are way different. So that way I see that probably what will happen is there is going to be capital flow there more in the US a little bit, but I don't think India will have a big impact, at least in the startup scenario. There are way other investments which could have an impact.
right.
But I thought, and all said and done in the global context, I still think India is a very teeny tiny startup ecosystem, not much capital going in, so it's not going to have a dent. But yeah, it did cross my mind what's going to happen.
Right.
Awesome. Yeah.
So that's pretty much it from my end.
Yeah. So I think we should wrap it up. Karthik saying on the angel course. Maybe if Bhargavi has anything to say, we have uh,
Yeah, I was going to come to that, right? We are starting our batch 7 tomorrow. So excited. I think this is one of the largest batches we have had. And so because we still are having a lot of people wanting to register, I think we are going to have our next batch in quick succession now. So we will probably immediately open registrations for batch 8 as well. We are just deciding the dates. So yeah, can't wait to get batch 7 started tomorrow.
great.
All
Yeah.
right. On that note, thank you so much, guys, for joining us today. We'll see you again next week.
Yeah. See you guys. Happy week.
Bye.